For index futures, this week is contract rollover week. That means we are switching from an old contract to a new contract. So in this video, I'm going to break down what exactly contracts and futures are and when you need to be switching from the one you're on to the next one. And it'll probably help if I take these stupid glasses off and actually put glasses on that help me see. So now let's get started. So on the index futures, there are different contracts throughout the year that we are going to trade because they have the most volume. So right now I'm trading the NASDAQ June futures contract, and you know it's the June contract because in futures, each contract is going to have a letter that tells you what month that contract is for. So for the month of June, the letter is M. So it works by putting the asset you're trading, NQ, or ES for example, and then putting the letter of the month, in this case is M, and I'll give you the letters for the other 3 months later in the video, and then obviously the year. So for this current contract, it is MQM 2025. That is the current contract for NQ. That expires at the end of this week. Or we have the continuous contract. So this contract is basically going to take every single contract in existence and kind of push them all together. So if I go on to the current month's contract, NQ for June, and I go onto a weekly chart, for example, you can see that there is only so much data on this current contract's month, and all of this data from the past tends to get a little bit spotty, but the reason you would use this front contract is because ICT will teach you that the imbalances on this chart are the ones that are going to be the most influential on price. Obviously, you can use the continuous contract if you want to, that is perfectly fine. I just prefer to do my analysis on the front running contract. And also, I like to have a somewhat of a control of when I'm going to switch to that next contract. On the continuous contract, you don't have a choice really. You switch when the continuous contract switches, which actually was the start of this week. So you can see this arrow at the bottom here. That denotes that the continuous contract for NQ has switched from the previous contract to the next contract. And for NQ, or index futures in general, that contract is NQU 2025, which denotes the contract for September. So we will now switch from NQM to NQU, and then at the end of September, we will switch from NQU to NQZ, which if I go onto a daily chart on the continuous contract, this is a little kind of just tip to see what contracts are what. You can see these arrows at the bottom that will denote every time there's a switch. So obviously, like I just said, at the end of September, we will go from NQU to NQZ, which is the December contract. And then we will go from December's contract to March's contract, which is NQZ to NQH, and then back to June contract, which is M. And if that sounded too confusing, then here it is on the screen right now. We have obviously M, U, Z, H. And when I say June expiration, that means that that contract expires in June of that year. And then if you want to know when I will personally move over to the next contract, rather than just being moved over automatically, there is somewhat of a criteria that ICT suggests for when you should switch over to the contract if you have the choice. So we're going to go over to a website called barchart.com, and then we are going to search for a symbol. So I'll just search for the current month's contract, and then it'll load up this page right here, and this might look like a lot of numbers. There's only one number you need to care about on this website, and that is the open interest for the current month's contract. So you can see that the June contract has an open interest of 228,710, and if I scroll down, then I can see all of the contracts. So that's the June one that we're on right now. And then if I click onto the September one, which is the newer one, this has an open interest of 62,561. All that essentially means is that currently, even though the continuous contract has switched over onto the new contract, there is still more interest in the June contract. So I will not personally switch over to the September contract until this open interest is bigger than the open interest on the previous contract. So that is it. That is the only rules that I will follow, and I'm going to tell you to follow, because that's how ICT has taught to do this. And it makes sense when you think about it. You want to be trading the contract that has the most interest, because that one is going to have the most volatility / volume for you to be trading. And I will check this kind of every day, every now and then, especially right before market open, right before I'm going to be doing my trading session. I'll sit down and go, right, let me just check which one has the most open interest. Does it have more than the previous contract? Okay, right, it's time to switch over, or time to stay on the contract that I'm still on. So right now, as of Monday the 16th of June, I will still be trading on the June contract until probably about Tuesday, Wednesday is normally when you're going to expect it to switch over to the new contract if you're doing it this way using open interest. But that is all I have for you boys in this video. I hope I was able to teach you something and help you out a little bit as regards to futures contracts and when you should roll over. If you did, then I will obviously appreciate a like and subscribe. But yeah, that's all from me. If you guys are going to be trading this week, then be very careful because this is going to be a tough week most likely. But I will wish you good luck, good trading. Catch you later, boys.